It's textbook, but in real life, with all the different people that I've met, mentorships I've been a part of, I've not met an individual. That
Okay.
is, we fix you up, we may add some authorized users to boost up your score, and then we get you that 0% APR through the different lenders that offer. Credit will change your life. It changed mine. So
Welcome back to today's episode of the Lady Landlords podcast. Have you ever wanted to buy rental properties in either the name of your LLC or get out of that dreaded save, buy cycle? If so, you are definitely going to want to listen in to today's episode. We have Bree here, who is a funding and credit specialist that's going to talk about some of the options that so many of our members have wanted to learn about. Bree, thank you very much for being here today. How are you today?
thank you for having me here. Thank you so much. I'm doing wonderful. So, as you said, most people call me Bree, but my name is Brene. I'm from Florida. I started my credit journey very young when I was 18 years old. I moved here. I had immigrant parents, so there was a lot that I had to learn the hard way. Going to college, funding that college experience, building credit, because I realized as soon as I got here how important credit is in this country. So once I built my credit, started my first business, which was a Turo business. I had 7 cars invested into Turo that I was doing the rental stuff with. Then I started helping close friends and family with their credit, helping them get funding. And then I turned it into a business when more and more and more people started asking me for my help. And here I am today.
That's so cool. I love that. I love that journey that you started with Turo. For some of our listeners that might not know what that is, can you just share a little bit about what Turo is and how that works?
So Turo is similar to Airbnb, but for cars. It's a third party where you can go and allow your cars to be rented on Turo instead of trying to do the whole word of mouth yourself. You upload your cars to the platform and they're going to do the marketing for you. People book through Turo, book your cars through there. You get paid through there. You can insure your cars through Turo as well. You also need to have your own personal insurance. That's pretty much all there is to it, is renting your cars on a safe platform, and it's a good source of money for sure. Yeah.
I love that it fits kind of this gig economy and side hustle economy that we've been in for so many years, of really saying, what are these extra things that we can really do besides kind of that 9 to 5? And it sounds like you are very much in that entrepreneurial space. So Turo itself then kind of led you to this journey into credit, into funding. How did you become the expert in that? How did you start educating yourself? How did you start learning about then credit, especially being from parents that immigrated here? How did you start to kind of get that financial education?
For sure. So first it started with me, and then you have, my own little personal experiences with business and so forth. But then you're going to come across individuals who had experiences that I didn't have, experiences like bankruptcies and stuff like that. So then that put me in a situation where I've invested a lot of money into mentorships. And that was really what helped a lot, to have someone more senior than I am hold my hands, show me how
Yes.
things go, just guide me throughout the entire process, helping me understand certain laws when it comes to credit. Also, I will say YouTube, TikTok, all these things, because everyone has something that you can learn from them. But it was mainly a lot of mentorships that guided me to the wealth of knowledge that I have today.
As you kind of went through that journey, and I love that you said that because it is so important to find those that have that information. And it's so cool how we can use social media to really educate ourselves outside of the school journey and all of that. What was like your favorite part, or what was the piece that made you say, like, that's it? Within all of this financial space that you're learning and within all of this entrepreneurism, what made you say, like, hey, it's the credit piece, the funding piece that just really had you just captivated?
Right. Because I don't want to be like super dramatic about it, but if you don't come from a background of wealth where your dad is an engineer and your mom is a doctor, credit is what is going to give you that even playing field. Credit is what is going to put $50,000, $100,000, $250,000 in your hands. And if you have an idea, this is what is going to allow you to bring that idea to life and even scale it, because most people don't have $100,000 cash sitting around. So when I realized that I have the knowledge that can make that a reality for certain people, where they can get this money and start their clothing line, start their Airbnb business, start their hair salon, whatever it is they're trying to do. I was like, this is very, very important. And it makes an
Right.
impact for sure. Yeah.
It is. I feel that without that access to funding, it
Mhm.
really holds a lot of people back from being able to start that business. In Lady Landlords, we have over 55,000 women, and so many of them are always held back from buying that first property, from whether it be a long-term rental or a short-term rental like the Airbnb model, but they're always held back, and it tends to come back from funding. So for a lot of the options that we're going to kind of talk about here and some of the business funding that you work with, how important is a person's personal income, personal debt, personal credit score? Are those things that they still need to be, a very high numbers for? Or is this something that now within some of these alternative options, they can really fit people of different debt, of different income, of different credits?
Yeah, so there's a lot of different opportunities. So I'm going to touch on just the bad credit first. So there are
Okay.
individuals who have bad credit and it's not realistic to fix it as of right now because probably they have a lot of things on their credit. They probably have a mortgage, student loans, cars, all kind of things. So that affects the debt to income. So what
Mm-hmm.
happens for these individuals, especially if they have a good source of income, like they're making $10,000 a month or better, we help them out with MCA loans. MCA loans pay attention to your revenue and they pay no attention to your credit whatsoever.
Okay.
So, with these loans, just being very honest, are you going to get that 0% APR? Probably not. But you're able to get funding, $50,000, $75,000, according to how pretty your bank statements look, because that's what the funding is based off of. So, when we have an individual, they're making good enough money, but terrible credit, we push them in the directions of the MCA loans. So that's
Okay.
for those with bad credit. Now, when it comes to the score, it's not so much so the score, but the credit profile. Because
Mm-hmm.
unfortunately, there are individuals, they have a 750 credit score, but they only have one credit card. And that's not very helpful in trying to get you funding. What you would
Right.
need is at least five primary accounts, the more the better. So sometimes that person with a 680 may qualify because they have a lot of things going on in their credit. They have
Huh.
installment loans, they have credit cards, and they can show a creditor that, hey, I'm used to handling money and I have a good relationships with other banks. That's what is more important than just having like the high score. So with the individuals who have a credit profile where we can fix it, like it's just a few collections, late payments, we can dispute those, we can get those off. We then point them
Mm-hmm.
in the direction of the 0% APRs. So that's getting $50,000 from certain banks, 0% APR for the first 12 months. And that
Mm-hmm.
allows individuals to make good investments and not have to worry about interest, at least for
That's
those
really
first 12
cool.
months. Yeah.
I like that you said that really having a robust credit profile and
Mhm.
actually showing more usage, more that you're paying those payments back, that you have multiple cards rather than just like one card and that's it. And that's what you've had for 20 years and you pay it off every single month. And how high that number is, but really the whole credit profile is really important. Because I was going to ask you to define bad credit, but it sounds like, once again, it's not just a make it or break it number, but it's really why does that person have that number? Am I understanding that correctly?
100%. You'll be surprised to find out that a person with a 680 credit score, 670, could get approved for more than someone with a 750 score. It's
Is
according to
there
what's going on. Yeah.
is there a number though that like nobody's kind of touching? Is there something that if somebody came and said like, "Hey, this is my score," that you're kind of like, "Girl, I can't do anything with that."
For sure, there is. Unfortunately, anything below 640, yeah,
Okay.
that means there's something negative on your account that needs to come off. A collection, a charge off, late payment, something is wrong. It shouldn't be that low.
Okay. And then also you mentioned a little bit earlier an MCA loan. Can you
Mhm.
define that?
Yes, so MCA loans are merchant loans. So these are private lenders. They're not like the big banks like Chase or Wells Fargo. So usually with MCA loans, even the payment terms, you usually make biweekly payments to MCA loans because it's based on your revenue and not based on your credit. So it's a little bit more riskier for the creditor. So
Mm-hmm.
it's not the most attractive thing, But sometimes people really, really need funding and their credit is just not in a position where they can get the traditional lenders to lend them the capital they need.
Right. And for those of us that are real estate investors, if my numbers, if I find a great deal, if I find a rental property that I can make work and I can still profit off of it at 10%, 12%, 15% interest,
Right.
I would still rather the profit that I would be receiving, even with the 15% interest, than just to not buy it at all. So it sounds like if that was something that I needed to do and still had to go that way for that funding, for that opportunity, it sounds still like an option that would fit for me, even if I don't have the most perfect credit or if I just didn't have the capital on hand.
100%. And that's something that is explained to clients that before we do this, once we actually know the terms for sure, because
Yeah.
you said something really good that the interest does range anywhere from 8% up to about 25, the worst I've seen. So once we get the terms, we want to make sure that you have your calculator out and you are figuring out if this makes sense for you based on what it is you plan to spend this money on.
Right.
Because that's the
So
reality. Yeah.
So to all of our listeners out there in Lady Landlords, this is why, once again, I've said multiple times, know your numbers, understand your deal analysis. So then that way, listen, are we all complaining about how high interest rates are at 6, 7% for a traditional mortgage? Yes, and we have been for years. But if it gets you into the game, if it gets you the asset, there's still options out there for you. And to be honest, it sounds like, Bree, some of these options, if I, worst comes to worst, have to still pay 20% in interest, but I can still, one, make a profit. 2, buy an actual asset. 3, actually start to build equity within that asset. 4, possibly refinance, possibly do something to get out of that situation. I'm actually using that loan that I still had to take a 20% interest to still get me in the game, to still allow me to make some of these changes. So that's fantastic to hear that there's options.
100%. I believe once you're not in the red and you're at least breaking even in the name of having real estate, I think that's a very powerful thing. Yeah, for sure.
Right. And still, if you're looking to, once again, get started, not everything's going to be a home run. Sometimes you have to say, this is how I'm going to get my foot in the door. With those types of MCA loans, are those something that would be under my personal name, or would I need to have an entity like an LLC in order to have access to that type of funding?
100%. You have to have an LLC because the bank statements that they're looking at, they have to come from a business bank account.
Can that be something that like I create today, or does that have to be a seasoned LLC?
It doesn't have to be a seasoned LLC, but they're going to ask you for 4 months of bank statements. So the LLC has to be at least that old for you to have like 4 months of business bank statements to show.
Gotcha. So 4 months is pretty standard.
Yes.
Okay. Now, if I'm a new investor, I can, yes, now here in the month of September, start my LLC. And then, okay, now I wait my 4 months. But do I have to show types of transactions or other payments? If I have no other rental properties, what types of things would a lender be looking for on those bank statements that would help me get approved and hopefully get me closer to that 10% interest rate rather than that 25% interest rate?
Yes, so what it boils down to is your deposits. If you can
Okay.
show that on a monthly basis you're doing 10K or better, $15,000 deposit in September, October you did a $20,000 deposit. In October you did a $12,000, and then in November you did another, like those type of 5-figure numbers. That's what gets you through the door.
Gotcha.
Yeah.
And does it matter what that comes from?
No.
Okay. The reason I ask that is for all my listeners out there thinking about either having money gifted to you, using private lenders, anything of that sort. If you can then say, hey, I can find a private lender, or I can use an inheritance, or my parents, my brother, my coworker will lend me $10,000. It sounds like if you could do that a few times to really make those deposits and be able to get those funds in, then you could really leverage that private lending into then being able to have access to some of these loans. So that's good to know, because it's not associated with like a W-2 or anything like that.
Right. They're not looking, like they're not really putting it under a microscope. They just want to see that in the beginning of the month there was a certain deposit. There were some
Yeah.
transactions. They're not paying attention to see if the transaction was at TJ Maxx or if it was at Target. They're not looking at it like that. But there's transactions. They can see that you're using this business bank account and that you also have, like a healthy balance in there. Because you don't want to put 10K and then you withdraw 10K. Like, You want to make it look a
Right. If
little
you put in 10K and you take out 10K, you're at zero.
right. So
Right.
for sure,
So
that's what it
making sure
boils
that
down to.
you're carrying that balance and really showing those transactions and actual business I'm doing over here in air quotes, that is actually functioning. It sounds like that's really what these lenders are looking for.
100%. And if you could just keep that up for 4 months, you're going to get approved.
It sounds like that opens a lot of doors.
Yes, for sure.
Okay.
Mhm.
And is that just through MCA loans, or are there other types of loans or other types of funding that businesses can get without a personal guarantee?
So MCAs is the one I have the most experience with. That's the one I've helped a lot of my clients with. Are
Yeah.
there other types of business funding you can get without a PG? That requires the building of business credit. So that's
Let's dive into that.
yeah.
So what is business credit?
So business credit is, to simplify it, your personal credit is attached to your social security number. Your business credit is attached to your EIN. Personal credit, you go to Experian, you go to Credit Karma. Business credit, you go to your Duns and Bradstreet, you go to Experian Business and so forth to look at your Paydex score and those type of things. So business credit is built initially by having net 30 accounts and so forth with different vendors. And then eventually you'll get some business credit cards, but still when getting those business credit cards with Bank of America and the different lenders, they may still ask for a PG in the beginning.
What's a PG?
So that's using yourself as a personal guarantee where you allow them to run your credit, but the business line of credit is not going to show up on your personal credit score. It's not going to
Right.
be there. Mm-hmm.
So when I first started as a real estate investor and then started our LLCs, I went to my regular bank because that's what I knew and that was the only option I thought I had. And they were like, "Great, we can get you a business credit card." And I was like, "Okay, here's my LLC, here's my EIN, not a problem." Then all of a sudden it became, I saw that they still did a credit check on my personal credit. And I was like, "Whoa, we didn't talk about this." Not very happy, Bree, I gotta say. But then I was told, "Well, listen, unfortunately, you still need to personally guarantee it with that, but it won't show up on your credit." So
For
it
sure.
didn't impact my DTI. It didn't make a difference, my debt to income ratio. It didn't make an impact from that perspective and kind of eat into my credit lines that I had as Becky, as within my own person. But at the very beginning, they were still looking at me like, "Lady, that's really great that you opened an LLC, but you don't have the established credit by that point in time." They still checked my credit, but it didn't impact anything else. So, and I got to say, I didn't really take a hit very much on my personal credit when I was checked for the business.
Mhm.
It was pretty simple. Word to the wise for listeners out there, if you are working on a project that also is owner occupied or you do need financing for something that is through you and your personal credit, please do be wary of opening then business accounts, because even though it was not added to my credit, my lender and my underwriter can still see that the credit was checked for something. So be careful opening those lines. Always check with your lender, your underwriter, before opening lines of credit. You also mentioned that one of the best ways then to be able to build that business credit is to have net 30. Can you please dive into a net 30 with us? Because I'm sure that's something that our listeners are going to want to hear about.
Yes, so net 30 accounts, there's several like businesses where I remember Shell being a good one. You could open up a net 30 account with them. There's something called Bizline. And the reason why this seems like something I have to go back deep into my memory for is because truly I don't have a lot of clients who are building business credit, believe it or not. Because it's
Really?
one of those things where the type of credit you have to establish in order to have no PG, it's not very common. Like lenders, they always want that PG for some reason. It's very difficult to get a line of credit and not have to personally guarantee it. So it's really not like I tell my clients about it, but majority of individuals, we are either doing the MCA route or we're doing the personal guarantee.
Right. I feel like a lot of that within lending changed also kind of around the pandemic,
It did.
because all of a sudden, great, you were able to get business lines of credit. I feel like for so many reasons, world was different before 2020. I think we can all agree to that. But
100%.
I feel like before that, I feel like business credit meant something different. Also, I feel like it wasn't so much for kind of the mom and pop smaller businesses, if you will, but for larger corporations to have these net 30s, to have a lot more business that was kind of being traded, and then a lot more billing, invoices, payroll that kind of came out later. I feel like with the pandemic, and maybe even kind of the real estate crash, economic crash back in like 2008, I feel like then all of a sudden a lot of lenders said, hey, we don't just want to give business credit funding lending that can just kind of fold and then we can't collect on anything,
Right. They
right?
tightened a lot. They tightened up a lot with that for sure, which is why it's not something that's super common. And as you use the perfect terminology, that it's not a mom and pops kind of thing.
Right.
Yeah.
So I feel like that's probably not a better way to go. I feel like I see, and you probably see this too more than me on like Instagram with like so many people saying kind of like, oh, go build business credit. You don't have to personal guarantee anything. When you see those reels or people promoting those types of things, as an expert within business funding, like what is your opinion when you kind of hear people saying like, oh, just go build business credit, get all this money, and then just go build your investments from that?
I think it's cute. I think it's textbook, but in real life, with all the different people that I've met, mentorships I've been a part of, I've not met an individual who's gotten business credit and did not have to PG it at all. I have not come across that yet.
Unless I feel like they're multimillionaires and have had long established businesses.
Right.
And that's what I've been more hearing, is that with that business credit, that it just takes so long to establish. Once again, a lot of our community within Lady Landlords, a lot of them, once again, will save their money from their W-2, from maybe a side hustle, whatever it is, be able to finally go and buy that rental. And now they say, great, I want to buy another rental. And they get stuck in that cycle. So they kind of get drawn to this, how do I build business credit thing? But it sounds like, to be honest, by the time you build that business credit, get established enough to actually get that funding, you probably could have saved anyways in just as much time. So it doesn't sound like really that business credit is cutting down the ability to access funding, but it sounds like more of an MMCA loan would be a faster route to go.
For sure. And the thing about business credit and the PG route is it's not showing up on your personal credit. So even though you just went and bought a golf cart on your business credit, but you PG'd it, you can still go and do the same thing 6 months later because it's not affecting your debt to income ratio. It's just make sure that you're making your payments because if not, then
Right.
it's going to show up on the personal credit when it's delinquent. Yeah.
Right. And that's why also, once again, listeners, that's why we should be buying cash flowing properties and not ones that put us in debt, right? So that way we don't have a problem doing that. For your role, really being that facilitator to those types of loans, how does somebody find how does somebody find that conduit to these types of options? I'm clearly going to put your information, Bree, down in the show notes so people can just directly reach out to you. But what are people asking for to find somebody that would have access to this type of funding?
For sure. So I have a lot of relationships with realtors. So I think they're a good starting point when you ask realtors about credit and financing and funding. They would at least know one credit repair specialist. And anytime you know someone who does any type of credit repair, if they don't have the access to the funding resources, I bet my last dollar they know someone who knows. So there's that way. There's also, just Instagram, TikTok. Most people are sharing what it is that you're doing on these platforms. And once you reach out to them, they'll for sure guide you in the right direction.
Right. I think it's so cool that we could go through some of these non-traditional paths to get access to capital, right? I feel like years ago it used to have to be go to a bank, take all your paperwork in. They would look up, kind of this profile, all that. I think it's really great that we can use so many different resources like social media to be able to really get us access to some of this capital that we need to grow as entrepreneurs, as business owners, even though, because real estate investing really is being an entrepreneur. So on the other side, the people that are then funding these MCA loans. Who are they? Are they institutions? Are they people? Are they a conglomerate of people?
Yeah, so there are different private lenders, and there's a lot of like that was another thing that really opened up my eyes too, because when we think of lending and lenders, I'm thinking of, all the banks that we usually hear about. But then there's all these little banks that, no one's talking about. And so I have a lot of different relationships with a lot of different individuals, bank managers at the big banks. We have those relationships with them as well. But then there's this guy that I met at I think it was a real estate event, and I have another one I'm going to. Like, real estate is a very powerful thing, as you know. So
Mm-hmm.
met him there, connected with him, and he's the one who sends over all the different MCA opportunities and so forth. And once I have a client that I realize, okay, this is an opportunity for them, we just put them through the process and get them funding. And the thing about the MCA, the turnaround time is crazy. It's anywhere from 24 to 72 hours, and you have the
My
money in
God.
your bank account.
I was just going to ask you to walk me through your process. So I meet you at a conference for real estate, and I'm here that you have funding options. I say, great. I have a bunch of other opportunities, things that I would like to be able to invest in. Where do I go from there? What's the first thing that you'd have me start with?
Okay, so I would ask you, what is your credit score?
I'm going to go with the 650, right? So it's above that line that you gave me at 640. So I'm going to use the 650, for example.
So you're going to say 650, and then I'm going to ask to pull your experience to actually see what's on there. If you have credit that's not terrible, where it's little minor things that can be fixed, a few late payments, a few collections, get these things removed, we're going to try and get you the best type of funding, which is the 0% APR. That
Okay.
is, we fix you up. We may add some authorized users to boost up your score. And then we get you that 0% APR through the different lenders that offer and see how much we can get you. If that's not possible, because you actually, like, there was an individual who wanted funding 2 days ago, 7 credit cards, all of them are almost maxed out. I cannot do much for that type of situation, because you would have to pay down each of these cars to below 30%. And that's going to take sometimes 7 cars. So,
Right, that's going to add up. Exactly.
right. So, with an individual like that, 7 cards almost maxed out, the only other option would be, hey, what is your revenue like monthly? Are you making 5 figures? They say to me, yes. Then we go through the MCA process. We get Eric on the phone, we do a Zoom. You get your bank statement sent over. It looks pretty. You have nice deposits. You're using the account. Within max 72 hours, they're going to give you an offer or multiple offers based on what we were able to collect. You make a choice. You have that time to run your numbers, make sure that you're not going to be in the red. You
Right.
take an offer, the money will be in your account within probably 1 to 2 business days.
That's so crazy. Is there anything else on like an application process? Like, am I asked for any other personal information? Do I need to share anything about a job or other funds coming in? Anything else on an application I got to fill out or no?
No, it's just your name, phone number, the bank you bank with, the type of business, right? And there are certain businesses that are a little bit more, high risk.
Right.
So you want to be mindful of that. What else? Yeah, they're not
Well,
even asking for like a business website or anything like that. No.
right. And once again, within real estate investors, we don't usually have our own websites, for a property. Most people own 2 to 4 different rentals, really kind of at a maximum kind of space. Once again, you're kind of mom and pop landlord, if you will. Is there any type of fee to then access these types of loans? Is there like an app when I fill out an application and say, hey, I want to move forward with this, in order to get kind of those quotes, are there fees that I would be expected to pay upfront before that loan gets funded?
No, there are no fees up front. After, there's a 5% fee if you get funded.
If you get
That's,
funded, a
yeah.
5% of the total amount lent.
Yes.
Okay. And is that then a fee that I have to pay like upfront, or is that then broken into my regular payments where I'm paying that over time?
So I've seen both been done. Yeah.
Okay.
So I guess it's more so based on the situation. There's times where it may be broken into the loan, or you may have to pay it upfront. It depends on the lender.
Right. They're going to kind of give you that different kind of space. What are the ranges that you've seen for funding? What can somebody expect? How are we going to know, like, okay, great, I got a loan offer and, someone's going to give me a loan of $2,000 versus,
Mhm.
hey, I was able to get a loan for 200 grand. Well, how is that determined? Or what have you
Okay.
seen?
Okay, for sure. So when it comes to MCA, it relies a lot on your revenue. So it's based a lot on that and what they believe you can handle. So the higher your deposits are, the more money you're going to get because they want to make sure that you can pay off these loans. So the highest I've seen someone get when it comes to MCA is 85,000 so far with me. I've heard of, but personally, that's what I've seen. When it
Right.
comes to the traditional way where your credit is together, it's up to as much as 250
Wow.
because that's
Okay.
not based on your revenue. It's just based on your score and making sure you have a very solid score. So we'll go to one establishment, get you 50K with them. Go to another one, get you another 50. Go to somewhere else to get you 50K again over there. So by the time we're done with the funding process, anywhere from 50K lowest up
Right.
to 250.
Right. But what I'm hearing you say there is I can kind of stack that, right?
Right.
If I get a couple different offers from different lenders, it might be different payments, it might be at different interest rates and different terms, but I can say, okay, here are these, 5 quotes. I'm going to take lender 1, 2, and 3, right?
Right. Yes. So it's according to, what the individual is trying to do. Some people, they don't need that much capital. 50K will suffice. But then you
Right.
have individuals who are trying to build an empire. So they're going to take
Yeah.
as much as they can because of what it is they need to do.
Right. And then do you see a lot of then kind of repeat clients? Like then I can still come back to you and say, okay, great, I took that 50K. I was able to do something with one rental property. Now I want to come back. Now I'm in a better position. I have more money coming in, more transactions, longer established LLC, improved credit.
Mhm.
Let me come back for another option. And you could use these loans multiple times then.
Yes, 100%. For MCA loans, there are a lot of repeat clients for sure.
And
Mhm.
where does the what I'm using those funds for factor in? Is that ever a question of, hey, I'm going to go buy a rental property, I'm going to go start a hair salon, or I'm going to go to Vegas and put it on black? Is there any of that kind of involved in the conversation?
Not really. What it comes down to, like, let's say the Vegas example, I hope you make the money because it comes down to can
Right.
you pay your bills? Because
Right.
the only time it becomes a red flag is when you're delinquent. If you go to Vegas and you strike gold, no one cares that you went to
Right.
Vegas.
Right. If I'm paying my bill back, nobody's going to question anything, right?
But if you went there and you lost everything, that's a problem. Now you can't make your payments.
What
And
happens if I can't make my payments? What is the penalty for that?
so you might, and this is a big might, but they might sue you. They might pursue that route. They're legally allowed to do that
Right.
when you
Right.
default on, yeah.
Right. So then they're probably going to come after any other assets I have, or once again, they saw bank statements of money going in and out. They know that there's other funds there that they can probably come after.
That's a possibility, yeah.
Right.
Mhm.
Okay. You mentioned kind of that DTI kind of factor, right? That they want to make sure clearly all your credit cards aren't maxed out and really looking for about that 30% of that space. So outside of, definitely being above, a 640 kind of space there,
Mhm.
outside of having, kind of no more than that 30% usage on like current cards, any other requirements, anything else that will get somebody either approved or declined?
Yes, 100%. So no late payments for sure. No
Mm.
negative marks, no collections, no charge-offs. When it comes to inquiries, they can't be recent and it can't be a lot. We'll have to remove those inquiries because banks don't want to see that you've been asking everybody everywhere for a lot of different things. So for sure that has to be removed as well. Payments have to be up to date on time on what you currently have, whether it be you have student loans or anything else that you have going on. The payments need to be up to date. What else?
Ooh, I like that you mentioned the student loans.
For
So,
sure, because I've been running into a lot of that.
well, I think that's, something pretty common along along the lines for people just with cost of education. Does medical debt get factored in?
Not, no, because and the thing about medical debt, it's one of those things, there's so many laws that keep changing regarding medical debt. So
Yeah.
even if someone did have medical bills on their credit, it's not too hard to remove
Right.
because in
That's the
some
whole piece.
instances, it's not even supposed to be there.
Right. So
So,
really very, very nice bandwidth, very good options for this. Once again, it sounds like having that conversation with somebody like yourself to see if they would be like a candidate for it, and making sure, once again, credit has a robust profile in a fairly decent shape, and then also can show transactions through an LLC, and then not overusing and maxing out all your credit cards. So seems like some pretty low barrier to entry to be able to really access some great capital for investing.
for sure, it's either or. Like you can have all the credit stuff going on and you don't have the revenue, and we can get you funding that way. Or you can be not too hot on the credit side, but you do have the revenue, and we could get you funded that way. So,
Right.
yeah. So, like, I was saying, if someone has a solid business idea, they're confident in what it is they're gonna do and want to do, it's credit will change your life. It changed mine. So, for
Right.
sure.
It sounds like really just having that open dialogue and really seeing what ways things can work out and what options are at play is really where things start.
100%. And also not being afraid of debt and credit. Once you're responsible and you know what you're doing, I remember when I was telling my family that I'm getting approved for 25K here, 50, and they're so afraid because they're thinking, that I'm gonna go do something crazy, but no, you just have to be responsible. You're a businesswoman, like you know what you have to do.
Right, right. And there's a difference between taking on debt, and I get it. A lot of people out there, we don't want to take on debt. We want to make sure that we can always pay our bills in full. But when we're building a business, when we're leveraging, sometimes there are ways that we need to be able to access capital to be able to grow. And we need to be mindful not to over leverage, but we also have to tap into the resources that we have available to us. So thank you. That was a really great reminder.
For sure. Of
Well,
course.
Bree, thank you very much for your time today. I appreciate you walking us through this. It sounds like this is a great option for a lot of our members, so I am going to put your contact information down in the chat and the show notes as well, so that way hopefully some of our members can reach out to you and see if they would be a candidate for this type of loan. But otherwise, thank you so much for your time today. I greatly appreciate it.
Thank you so much for having me. We'll be in touch. Thank you.
Yeah. For all of our listeners out there, please do make sure to hit that subscribe button so you do not miss the next episode of the Lady Landlords podcast. We release new episodes every single Tuesday. Thanks for joining me, and see you all back in the Lady Landlords Facebook community.
Thank you for listening to the Lady Landlords podcast. If you're feeling stuck in your real estate investing journey, visit lady-landlord.com to book a 15-minute orientation call with me and see if you're ready to join our mentorship program. Or you can subscribe to our newsletter and join our Facebook group for exclusive real estate investing tips and offers. Invest with confidence. Become a Lady Landlord today.